supposed to stick it in the ground.
It is in the ground.
Outside.
That was your idea.
Welcome to Market Makers, everybody. Happy early July 4th. It is a short market week. The markets are closed on Friday for the celebration of July 4th, so there will not be a Market Minute update on Thursday. Be sure to like and subscribe to the channel. Click the hype button. If you guys want my videos throughout the week, definitely consider joining with the join button right there on YouTube. Open up the video description. You'll see the timestamps for today's video. And also you can check out the trading platforms there if you would like to support the channel that way. I would appreciate it. Let's talk about the price action because as you guys know, I've been predicting a July rally, right? Our macro targets, bull case 7,000 that we predicted last April 2025 was hit. 7,500 max bull case was hit. And here we are at 74.23. And I don't think the market's done. I've showed you this chart before, but this is largely part of the reason why. It's all about the fractals and the market psychology that has happened the last 3 years in a row. Rallied into July in 2023, out into late July, retraced 10%. What do we do in 2024? Rallied into July, mid-July, retraced 10%. What did we do in 25? Rallied into July, small pullback, 3.5%, continued in the strongest turnaround rally in stock market history to hit that bull case target of 7K. So I wanted to show you something and I want to play something for you. You guys that have been watching this channel for a few years know that I like Felix Zulauf a lot. For a couple of these years now, Felix and I, our forecasts were very much in sync. He's part of that trading triangle that's produced billionaires, talking about Scott Bessent, Stan Druckenmiller, Felix. They all were together under Soros at one point, believe it or not, even though some of them have diametrically opposite political views like Stan Druckenmiller. But they are like phenomenal traders. Felix was part of that group as well. So I want to share with you something Felix says because I disagree with him, but he also says something interesting, and I want to talk about it on the other side of this clip. So watch this 1 minute clip. We'll talk about it on the other side.
And I believe we are in the late stage of that cycle. I cannot tell you when exactly it will pop, but I think it will pop sometimes in the next 12 months. And more likely the market may top this year, later this year or so, and then we go in a classic bear cycle. And due to the enormous debt the world has accumulated, and particularly some of the governments have accumulated, that next down cycle in the economy, in the markets first and then in the economy, will create all sorts of dislocations and systemic problems, and it will be a big mess. So I think we are enjoying the later part of the upcycle, and the hoorah could go on into anywhere from third quarter of this year to first quarter of next year. That's where I see the equity markets to top out. And then a down cycle, and the down cycle will be not 20%, it will be somewhere between 30 and 50%, and the recession.
So what's not surprising, I guess, is that bubble narrative, right? The bubble narrative is all over the place. Felix is on the bubble narrative too. His own take, because narrative always follows price action, is look at the global debt. You know, it's a big bubble. It's going to come back to roost, that type of thing. You were in extreme fear this morning, actually, in the markets, which makes sense as well. So when you're in extreme fear and you have the bubble narrative, which dominates the press. And if you look at it, and I say that because you can look at it statistically, and the bubble narrative videos are heavily dominating. But on top of that, the sentiment indicators show that as well. But I want to show what Felix is talking about, because Felix cleverly, and he's actually very good at TA. That's what I like about Felix. The difference between like a forecaster / investor like Stan Druckenmiller or Scott Bessent is they don't really use TA. Felix uses TA. You guys have seen his videos. He uses TA. He cleverly incorporated the two cardinal points in the market, looking for a market top. You guys may have picked up on it since you've been watching this channel as well. Fall equinox, spring equinox. When did he say the market could top? fall equinox, Q3, or Q1, end of Q1, spring equinox. Those are the cardinal points in the market. So he doesn't know when it will top, but those are two areas he's looking for the top. So the reason I want to share that with you is what's interesting on this chart is this fractal. If we pull a fractal after this 10% retracement we did back in 2023, if we pull that fractal, this ran all the way up to February 2025, and then we had the 1,350 point drop with the tariff derangement sell-off, right? Let's just pull that fractal. I want to show you guys something interesting. If we connect this fractal to the low here with the Iran war scare, I want to show you how this thing lines up. This thing is pretty amazing. And I want to show you what I'm talking about here with Felix, because this is really interesting. So look how this fractal predicts the path price action here you could have for the S&P. Now, what's interesting about this, again, we had a 9% pullback with the Iran war scare. You had the 11% back there in 2023. You had that 9% pullback. And what do? We came right up to 7,500. My max bull case target actually overshot at 76.25. What did this fractal predict? The fractal predicted literally hitting 7,500, getting a pullback. That's what you're doing right now on this chop here before July is the pullback, and then you go up. And then what do you do when you go up? You're going to do that larger retracement of 10%. But the interesting thing is, where is this fractal predicting that top before that retracement? 7,900. What is my July prediction? 7,800 to 8,000, right? Then you correct 10% and then you continue up. And what does this hit? The 2618, which is 83.21. Why is that significant? It's significant because every single Fibonacci projection I have given you guys has been hit since I predicted it back in April of 2025. And again, not a genius. It's just understanding the mathematical ratios in the market. What were those predictions? 7,000 for the bull case. Hit. 9% drop, 7,500 max bull case. So far, we are down less than 3% in today's price action, and you were in extreme fear. Sound familiar? Go look at your YouTube feed. This is the top, no new highs for 20 years, 50% crash. That's all coming. You're going up from here, okay? 7,800 to 8,000, just like this fractal predicts, I think is when you're going to get that top, and then you'll get the retracement, the scare with the Fed, the midterm election cycle. You get that retracement, and then guess what's happening after that? You're going back up. And that is how you could see this play out, which is interesting because, again, if you can survive August, September of just this 10% drop and not get the larger drop at that point, you're going to be set up extremely bullish for the most bullish time of the year. That time running out from November until the end of April, right? Then November to the end of April, most bullish time in the marketplace is a very important time. And that is when you can see that 83.21 coming to fruition as well, end of Q1. So that is really interesting to see how this fractal is predicting the price action. So we'll see how this plays out, because this is something that I think is, it's got a good possibility to play out. You don't know until you see what happens here with the price action, because again, when we look at the screen, this is a zoomed in view of the daily. You formed a triangle. And I've been telling you guys this extremely bullish bottoming pattern. This is a W fractal, a pattern Gartley wrote about. Shabaka wrote about it before Gartley. All these people have written about this. Most people don't even understand what this pattern is, but it is a bullish bottoming pattern. If we break out to the upside, there's your 7,800, there's your 8,000. We come up here, we get a nice 7, 8, 9, 10% correction. It drops you back down. What would that actual measurement be? Just drawing squigglies here. Let's say we get up to 8,000 here in a July rally. What is that 10%? 10% brings you back down right about to 7,200. So basically returning to this fractal of 7,229. So that would be a 10% drop. Anything beyond that 10 to 13% will take you back to 7,000 where you have a ton of support. So that is going to be the larger drop potentially if we get up to 8,000. And again, setting you up for the most bullish time of the year right after the midterm elections. I played those videos for you with Jeff Hirsch as well. Statistically, the average rally after the midterm election on the NASDAQ is 66% to whatever the high is going to be in 2027, a 66% rally. That is absolutely massive. And again, generational gains. Some people understand these concepts because it's data. It is not an opinion. It is what the data has shown historically in the past in 100 years of data for the Dow and since the 1970s in the NASDAQ, 66% rally. So we'll see how this sets up going forward. Looking for a breakout as we approach the apex here, coming up to 7,800 to 8,000, and then looking for that potential summer top and a summer retracement. So we have the next 4 or 5 weeks to see how this thing plays out. If we look at the NASDAQ, again, bullish candle today, nice 1.5% gain, 400 plus points. Where's a NASDAQ going in this summer rally? Well, if the lag 7 can catch a bid, you're going to see 31.8 at a minimum, and I would not be surprised to see 32 to 33 here in a summer rally for the NASDAQ before a retracement. So if we look at the, what's it called? The Russell, US 2000, look at the trend on the Russell. RMA trend, daily bullish, 3-day bullish, weekly bullish, monthly bullish, everything's bullish, just like you see on the major indices. I think the Russell is going to push up towards 32.42, so 32.50 here in the summer rally. Hold the trend line, keep the bullish trend, and then you will see a top, and then you'll see retracement, and you'll see everybody lose their mind about the 50% crash. See, even though I didn't predict the rally, I told you now's the bubble. Even though I said it's a bubble here, it's a bubble here, it's a bubble here, oh, it's a bubble here, it's a bubble everywhere. It's finally the top of the bubble. It's going to crash 70%. Those predictions will not change. Let's look at the DAX. DAX forming a beautiful bottoming pattern. Again, I teach these patterns, guys, in my education. You want to check them out, click the join button on YouTube. You got a nice W here. Came down 50% retracement. Looking at the DAX minimum target, I'm looking at 26.4 up to 27K is the price prediction projection. Of course, it's a trend line just above that, depending how bullish the DAX wants to be. But this is a bullish setup of the DAX going into a summer rally in the U.S. indices. I think the DAX is going to participate even though the ECB stupidly raised rates. They cannot control the price of oil, which, by the way, was at $70 this morning, dipped into the high 60s last week. I think it dipped in the high 60s again today, and Brent is way down as well. But this is what we got. Got a bunch of Keynesian economists in the central banks around the world. They don't understand where inflation comes from, and you, the people, get to suffer the consequences. Bitcoin crypto video out after. Guys, give it a look, and I'll see you guys on the next one. Have a fantastic and safe weekend. Mind your digits when you're lighting fireworks, boys and girls. See you on the next one.